Well, thank you, everyone. I'm going to stop my video for a second, just so I could, we don't have any lag on my screen here. My name is Matt Reith with Province Mortgage. I am not in San Francisco. I'm actually here, local lender here in Connecticut. I primarily service New Haven County, but I can lend in all throughout the states, or all throughout this state and a couple others as well. Again, we're local. We're actually going to be here in Shelton pretty soon, and Rocky Hill. Currently, we're in Cheshire. Today's topic, we're talking about condos. I know they can be a bit esoteric, a little bit arduous to get financing through, and even clients into, into them, or even listing them can be arduous at times. If you could stop me if you have questions as I go through the slides. We're slotted for about an hour. I don't think it will take about that, probably about 30 minutes or so, but we'll see how the questions go. Please feel free to ask as we go through the slide deck here. And then Rachel, if you could just chime in, can you see the slides okay?
Yes.
Okay, perfect. I can't see anybody right now. I can just see my screen. So if you do have a question, just unmute yourself and ask away, please. So who am I? Who do I work with? We're Province Mortgage. Again, we're local lender here. We have in-house underwriting. We try to host these regular seminars, either lunch and learns or Zoom meetings on a quarterly basis. How do we assist agents do more? Or how do I assist agents do more? We have a software that helps do lead follow-up. We do mailing campaigns, both emails, hard mail, and a couple other social media platforms that we're on as well. It's all about, for us, it's about, referral business and, putting the clients first and making sure that they have a great experience from start to finish. If you've worked with me before, I know I see a couple familiar names when they were joining. You know that we're available pretty much all the time. And we try to provide excellent customer service because it's about a relationship. That's how we compete with the bigger online lenders or even other bigger lenders out there in the world. Okay. And then lastly, we offer something that's pretty unique in the sense that in today's market, we have something called a buyer's edge program. This is a fully underwritten file from our head underwriter. It's not an automatic system. Our underwriter actually goes in, looks at the reviews to file that we submit, thereby giving a loan commitment at time of approval versus just a pre-approval. It's much stronger. It's basically if the property will pass, the client's ready to go. Of course, that helps in this market because you don't want to be writing up 10 offers like we have at times just to get a client into a home, which of course can be frustrating. So when I can call the listing agent and advocate for the strength of the file, it just adds a little bit more power to that conversation. Okay, so today we're going to cover a couple things as far as a timeline that I think should be expected when you're looking at financing a condo, the difference between a warrantable condo and non-warrantable condo, documents for all the players, both on my side and your side as an agent, the difference between a full review and a limited review. We'll touch a little bit on what's a FHA Spot Approval that came back in, I believe, 2019. And how you can kind of look up some things for FHA, VA, and flood. And again, if you're just joining, please, feel free to ask questions as we go through the PowerPoint. So let's go through a simple timeline of, why does it take a little bit longer for a condo, to possibly get the approval? Let's imagine we got a contract in, and we're signing it. We got the verbal today, and next Thursday, I received the contract. July 1st, which is next Thursday, I get everything ready. I disclose to the clients, which generally takes about 2 days to get back. Once we disclose, clients have to e-sign and they get everything back to us. That'll put us on Monday. We received the disclosures back. At that time, we can request the appraisal and title. I will say in today's market, what I'm kind of seeing on the streets is appraisals are taking about 3 weeks. As we get busier, things start to open up a little bit. I find that the appraisers are starting to come in a little bit. They're taking a little bit longer on their timeline. So I would say, anticipate 3 weeks. That's kind of what I'm seeing. The next day, we send it over to our processing team. For me personally, I work with one processor and one underwriter, so I'm the face of that whole transaction. The clients meet with me strictly. I do have help on the backside in processing, but primarily I want to be that relationship driver. The condo association, this is different per, and I know there's some discussions on some of the forums out there, and there's some debate about it. Generally, what I find, the person who pays for the condo questionnaire is the buyer. The buyer sends a check directly to the association, or they go onto a home site or home portal that's specific to the condo association and request the documents from that condo association. Just so everyone's clear, there's two types of condo documents. There's the resale packet and the condo questionnaire. Resale packet usually is gotten by the seller or the listing agent. The condo questionnaire is a specific questionnaire provided by the lender or some other form that they have online that generally speaking, the buyer will pay for it. It changes per condo association of how much that is. I have seen them as cheap as $30 all the way up to $200. That we include on my side onto the closing cost. It's much like the appraisal. The clients will pay for it up front, and then we take it off once we close in terms of the final seating. Within that time, getting back to the timeline here, so the condo association will start their paperwork on what they get. The clients are doing the inspections with the agent. They obviously inspections pass, let's say on the 9th, so we're still a go. Generally at that time, it's my personal practice that I will order the appraisal after the inspection, just so we're not charging the client the appraisal fee before the inspections are good. Now, if it is a tight timeline, I'll have that conversation with all parties and say, listen, when do we want to order the appraisal? If we're trying to close within 30 days, sooner the better. Obviously, there's some risk reward to that as well. I know there's other lenders out there that order it right away. My personal preference is we wait till after the inspections in order to order the appraisal for a variety of reasons, but mainly to protect the client's best interest and not have them forego funds that they don't need to. Back to the timeline, let's say on the 12th, so we're about 2 weeks into it, the loan is set to the initial underwrite for conditional review. Takes about, let's say, 72 hours max to get back to us for any conditions that we receive. From there, following the next week, we'll follow up with the conditions that we get. This could be anything from like updated pay statements. Hey, we haven't received the condo documents yet. We haven't received the appraisal. We haven't received title, et cetera, et cetera. The following week, let's say the week of the 19th, title comes back. We'll submit that back over. And then on the 26th, the week of the 26th, let's say things start really starting to come together. We receive the appraisal report back. We receive the condo documents back. Once we have all that stuff, we send it back into the underwriter for conditional review. With the condo documents, one thing that's hard, and I'll say this again, is that some condo associations are great. They're on it. They get docs back in 3 days, 4 days. Others tend to lag, and it's taken me a month to get condo documents back. So that's why the timeline is a little bit variable. And I always advocate for a 45-day close for a condo, just because if I haven't worked with the association before, I don't know their process. I don't know how fast they are. I don't know their response time. So I generally advise 45 days. Can it be done in 30? Can it be done sooner? Absolutely. But when there's outside players involved and I've never worked with them, I try to give myself a little bit of time and set proper expectations. Moving into August, we'll send it back into conditional review for the underwriter, gather any last minute conditions, and then submit for clear to close. I would say generally 24, 48 hours for clear to close. That's when I get the call and on the 10th and say, hey, look how cool we are. We got you clear to close. The initial CD will go out. That takes, obviously, as everyone knows, 3 days for the right of rescission, which would put us on a Monday closing which would be about 45 days from start to finish. So that's generally the timeline and some kind of as a guide to what you kind of be looking for a condo, comparable to a purchase of a single family home, with the exception of we have an outside player involved, which is the condo association, and that's why I generally like to give myself another 2 weeks. Any questions so far? Perfect. So you'll hear a term, what's called warrantable versus non-warrantable. Basically what that is a warrantable condo falls within the purview of a Fannie or Freddie loan, basically FHA or conventional. It's financeable for conventional and FHA. That's simply all it means. It's warrantable, meaning it falls within those guidelines. A non-warrantable condo does not fall in the guidelines of Fannie or Freddie or Ginnie or whatever agency we're going with. So it cannot be financed through FHA, conventional, VA, USDA, of the like. That is a different style transaction. That kind of condo must go to what's called a non-qualified mortgage product, non-QM product. Items that you can look out for, or some hiccups that I typically see with condos that could send some red flags. High rental ratios. The budgets are not on track. Any kind of pending litigations, slip and falls, lawsuits of the sort, or generally, which we don't really see this around here in Connecticut too much, is any commercial space greater than 35%. Another thing we see is like a condotel that's primarily like in Florida markets. I don't believe we have any here in Connecticut, but I could be mistaken. I just haven't come across them at all. The documents are, I say house versus money. House meaning, that's all you, the agents is the house, lender is me, the money. Things that you can look out for to help your clients, both on the list side or buy side. On the house side, we have the resale packet. I'm sure most of you are familiar with the resale packet. It generally has the rules and regulations of what you can and can't do in the first part. Can you rent it out? Can you have pets? What's the pet policy if you have a large dog or large breed or certain breeds? Parking restrictions, guest parking, things of that nature. Then you have the budget. Typically, I see them in there most times. Sometimes I don't see them in there. Basically, who's paying, how much are they paying, and two things to note is any upcoming assessments, which is to look out for, or any reserves, if any. And then as a note for reserves, we need a 10% reserve, or so no special assessment could be assessed. What that means is, let's say the condo is bringing in $800,000 in their HOA fees. They have to set a 10% reserve or $80,000 aside, and it'll break it out by line item. We'll say reserve budget account or something to that effect as a line item, and it'll be either quarterly or semi-annually. You'll be able to see that as it comes out. Generally, I don't see this too often, but they have a reserve study in there as well, and of course, any annual meetings and minutes. So that's on the resale packet. From the condo side, apart from the condo questionnaire, which is generally a 1 to 3 page paper that we submit to the condo association, whoever's handling that. Items that we look for is, of course, the reserves, which I just talked about, any delinquencies and how far the delinquencies. That's important because as for the lender, we don't want our buyers to go into a condo that's going to have a major assessment come through, and then they have a lot of delinquencies on their HOA dues, because the condo can go defunct and go belly up, as one or two have done within our local market here. The rental ratio is a big one. Generally speaking, we like to see a rental ratio below 50%. Any special assessments. So let's say if they have a roof coming due, and they whack everyone in the condo association with about a $80 special assessment every month for the next 4 years. That's an example of a special assessment. Pending litigation, again, any kind of slip and fall type stuff. A structure fell on somebody, some kind of lawsuit that they're involved in. There's a cap to it. They can have pending litigation. That's fine. It's just there's a cap. I believe the cap generally is $4 million. Again, the condo questionnaire, that's something that's provided by the lender to the association. If it is a FHA listing or we're trying to get through an FHA, it's a little bit more involved. It's about a five-page document going through. If it's what's called a limited review, which I'll get to next, which is more of a conventional product, it's usually about a 2-page document, a lot easier. The master insurance policy, we just want to make sure that everything's covered with that. And if the client needs, as the buyer, if the client needs what's called a HO6 policy, it's a walls-in policy, which covers everything inside of the condo itself. And I'll touch on that in the next slide or two. And then we'll also need the budgets, what they actually were from the previous year or two, and then what's forecasted for the next year. Questions on that? Because that was a lot.
So,
Perfect. Yeah, go ahead.
hey,
Was there a question there?
I have one.
Yeah.
What happens if condominium association is in trouble and, well, let me back up. There was a interim, there was an association where the board of directors was replaced by a new board of directors. And during the time that they were being replaced, about an 8-month period, nobody knew where to send their common charges, who was paying their common charges on time, etc. New board of directors takes over. They're trying to get everything back in order, and they are requesting that the unit owners provide the board with proof that they've paid their common charges for the last 12 months. However, we're trying to sell one of the units in there, and when they go to fill out the resale certificate and the condo questionnaire, they're unable to give information as to whether or not any of the unit owners are current.
Yeah, that's a great question. That's probably one uncommon scenario. I would say that, that one, that would have to be resolved. And then two, the underwriter would have to kind of get more information from the association to ensure that, everything would be fit, everyone fits the guidelines. So at least they're, I could certainly circle back and ask specific questions, that specific scenario to our underwriter, but I would say off the cuff here that the new board has to kind of get everything in order so they know where the money's coming and going, so they can, they're going to have to do it anyway, so they can properly allocate their funds.
My concern is more for the seller who's trying to sell that unit and the mortgage company that's trying to put the mortgage on it. I don't see how they could close on a unit where that scenario is in place. And the reason why I'm asking this is because we've got one in that situation.
Yeah, Daddy, I don't see how they can close either on that, only because 95% of the time as lenders, we're going to sell it off anyway.
Exactly.
And no company, I don't care if they're a big bank or a smaller mid-sized company like us, are going to want to take that risk and have a buyback on their hand because the condo association, the condo association can't figure out, not that they can't figure it out, they just need time to get everything together. I'm sure there's a reason why,
there's definitely a reason why. It was just nobody was minding the till and everybody was spending the money. So yeah. The association itself, the complex itself is in real trouble because of the fact that there was someone in the board or on the board that was literally went rogue and spent like $200,000 on stuff that, so they're going after the insurance company and whatnot for their employee dishonesty and their criminal policy. But
Yeah.
that's the situation as it stands right now. So,
Yeah, I would say the condo association, the new condo association kind of has to get their ducks in a row, and then the lender could go forward and, underwriter can take a look at everything.
okay,
All right,
thank you.
no problem. All right, so how can you help as the agent, whether you're a listing agent or buying agent? Apologies if you can see this. If you're a listing agent, do a, look at the resale packet, get that information. Ask questions for the board. Oftentimes I ask, hey, who do I talk to the association? And sometimes agents know, sometimes they don't. It'd be a big help from a lending standpoint if I had a point of contact to initially speak with, just to kind of glean a few questions. But if you're a really go-getter, you wanted to call and ask a couple questions. Now listen, the person, whoever that is, the point of contact might not know some of these questions, and they might just say, hey, submit a questionnaire. Before you submit the questionnaire. So what you can look for is the rental ratio. If it's over 50%, let me just back up a little bit. What I mean by the rental ratio, meaning how many people own a property and live in that property versus how many people own a property and rent the property. The second part is what we're concerned about, is how many people own a property and rent it out. So if there's 100 units involved in the complex and there's, let's say 60% of those are renters, well, that complex would be therefore deemed non-warrantable. So we're going to have to do a different type of loan structure, which will change drastically for that buyer. So the reason that's important as a listing agent for you to know is to say, what kind of offer do I need to accept or look at for my clients to make sure that the sale goes smoothly? And on the buying side is, what kind of lender can I partner with for my buyers if they're looking at a specific condo that we know for a fact is a non-warrantable condo. Budgets, if you can get your hands on them, just to make sure that they have a 10% reserve. Litigation, again, we touched on that. And any upcoming assessments is important to know, because I will say, as a lender on my side, when I'm doing an approval, sometimes there's no wiggle room. So if there's a $100 assessment, that might throw the deal. The faster that we can know on at least on my end, that, hey, there's an assessment of $100. Does that fit into your client's budget? Does it blow out the DTI? The last thing we want to do is go halfway through a transaction and find out there's an assessment coming due, and then it blows out the deal completely. So knowing those type of things up front could really help you as a listing agent and a buying agent with the transaction. So that way there's no last minute hiccups. No one likes last minute hiccups or stress involved. And then what we'll go over a little bit later is how to check to see if a condo is FHA or VA approved, and also how to check with a flood zone as well. You'd be surprised, there's a couple of condos that you would not think that they're in a flood zone, that there are certainly in a flood zone. We got to tack on an extra $30-40 a month in order to get the client approved. Sometimes it's not a big deal, but other times when we're really tight on the DTI, the debt to income ratio, it could in fact blow out the DTIs and kill the deal. As a buy side agent, some things to look for. I think you should have a good conversation with the lender partner you're working with, or saying, hey, what are your max taxes you're allowing? What's the max HOA? Do we include the HO6 policy, which is the walls in policy? Think of HO6 as homeowners insurance. Some associations, you don't need it because the master policy covers everything. So you don't have to include that into your debt to income on the lender side, but some they don't. I would say more often than not, I would advise to have an HO6 policy, which isn't terribly expensive, usually $30-40 a month. But again, if you're very tight on your debt to income, I always try to give a little wiggle room, or be candid, say, hey, we're pretty tight on our debt to income. We're kind of at our max. And then of course, asking if there's an assessment. And then I have a couple of clients right now that are specifically FHA clients and they're looking for a condo. That's kind of what they're looking to do. To narrow your search down, and I'll show you again how to do this, but there's certain condo associations that are FHA or VA approved that you can send to your clients, so that way you're not wasting time driving out to condos that you know are they're just not going to get financed on. I think that's a poor use of not only your time but the client's time, and you're maybe setting their hopes up for something that they might not be able to get. So we talked a little bit about before what's a limited review versus a full review.
Hey, Matt, can I just add one thing real quick?
Yeah, go ahead, Mark.
Going back to the last slide for the room for the assessment. You know how you can do, I don't know if the agents know how to calculate this, but sometimes if the association doesn't pass a massive review, like let's say they're borrowing money for a project, every association can tack on just by the board of directors. They don't need to vote for the condo association. They can tack on 15% of the annual budget as a special assessment. So let's say their annual budget is, for simplicity's sake, if their annual budget is $1 million, they can tack on $150,000 without a vote. They can just deem it necessary because of repairs and whatnot, emergency repairs, things like that. So that's something that you can just keep in mind in case your client is tight. That's something that they can do at a moment's notice, anytime they deem it necessary to actually add a special assessment. Those are typically paid for in a very short time frame, usually like between 4 to 6 months during the year. Yeah, and more and more condo associations are requiring HO6 policies because their deductibles are increasing for the master policies for a lot of things that are happening. So.
Yeah, great point, Mark. I generally include, it's just I think a good practice when you're building out, at least on my side, just include it, just so look, they don't need it, but at least you're at least allowing for it.
Yep. Well, that's just a simple thing that I just wanted to let it and make everyone aware of that in case anyone wasn't. So, because I'm dealing with a condo association that just voted down a major assessment, and so they tacked on a 15% assessment for this year. So,
it's good to know. Thanks for the input. Going back to a limited versus full review. In general, if you can have, I apologize, everyone, that I don't know if anyone could see that or how to stop that, but there we go. Okay, limited versus full review. Generally, I advise clients, if we're looking at a condo, to put at least 10% down. This will go into a limited review. It's 10% down or greater. So 10%, 15%, 20%, 30% down, right? So their LTV is lower. That warrants a limited review. Much easier process to get through. We're looking at a lot less paperwork. You're looking at probably a 1-page condo questionnaire, maybe a 2-page condo questionnaire. The underwriter doesn't have to dig in that much. We're looking at the master policy and just a couple other odds and ends items. A lot easier to get through. Just in case if you ever ran across this or experience it, if let's say you have a client who put the 5% down, going conventional, something comes up on the condo questionnaire or reviewing the association, and it's a deal killer. See if you can go put the extra 5% down. See if you can go to a limited review. I've had it happen where the underwriter has said, "Hey, just redo the condo questionnaire, get that back to me. We'll trash the old files, and now we have a limited review. It saves the deal. We can proceed." Now, of course, this has to be dependent upon the client. They have to have the funds, the means to do that. But as an option, if that were ever to come up in the future during your transactions, that's one possible way to keep everything going forward. For a full review, it's 10% down or less. So 10%, 5%, 3.5% if it's FHA, or 3% conventional. Obviously, is the lowest you can go. That's going to require you to look at everything. You're looking at the master policy. You're looking at the 5 to 10 page condo questionnaire. What's the budgets? Give me, 2020, 2021 forecasted. What are the expenses? What's any pending litigation? What's the owner investor occupancy? That goes, obviously it's a lot more, involved. It's generally anywhere from 20 to had like 55 pages before. So it's a lot of documents to review and look at and go over. The main difference being if you can go full review, put the 10% down, it's a lot easier to go forward. It's a lot less paperwork on at least the lender's portion of things, and the condo association as well.
Hey, Matt, under requirements for limited review, should that say more than 4 units? It says less than 4 units for both limited and
Oh, I'm
full.
sorry. You should be more than. Yep.
Okay,
Good
that's
catch.
all.
Good catch there. That's me just copying and pasting a little bit too fast as I build out the slide deck. I only saw, I think there's one, I know there's 1 or 2 floating around out there. I know there's one in East Haven that's 4 units. They're not common, only have 4 different ones. There's a couple duplexes out there that are structured as an association. It doesn't come up too often around here. But when it does, it generally, I would say, unless they're putting 10% down, it's probably not going to work out.
Yeah, I actually had in my own situation where I had to switch we had to actually switch. We ended up switching lenders actually because of it, because one of them did the full review when it wasn't really necessary, and we went to the limited review because the condo association was facing a lawsuit with an unlimited cap. So
yeah. So that's surprising that they didn't want to just kind of switch out the documents.
no, my client wanted to switch lenders. She wasn't happy with the service.
Okay, well, different story then. Just before I forget, a point of, if your client has to go to a non-QM product, generally speaking, the interest rates are going to be higher, the down payment's going to be greater, because as the lender or the overall servicer, they're assuming more risk because there's something that we found within the documents. So just be advised that if that does happen with your client and the deal structure does change, they're going to incur probably more fees. The rates are going to be higher. The down payment requirement will be higher. I've had clients who wanted to buy a couple places that I knew that were not going to be financeable, but they didn't care. They wanted to live in that complex, but just for your professional education, that everything's a little bit higher because we're assuming more risk. So if they're getting quoted a little bit higher rate with more fees, that's why, because they're changing the loan product. The spot FHA, getting back to the slides here, FHA Spot Approval. Christina, do you have a question here?
Yes. Is there a specific website to check if FHA condos are approved? I mean, I've Googled it and I've come across a couple of different websites.
Yep.
But is there like a specific one that lenders use that we should be using that's a little more accurate and up to date?
Yeah, there are, and I'll show that to you here in a second.
Okay, great.
Yep. FHA Spot Approval, it has been around for quite some time. I'm pretty certain most lenders within the local area that I know of do this. What this is, we are approving the unit. This came back, I believe, about 1.5 years, 2 years ago now. So FHA will come in. The underwriters have the ability, can approve the unit itself. So let's say you have a condo that is not financeable for FHA, but everything else pretty much checks out. The underwriter then has the ability to go in and spot approve that particular unit. Let's say it's 123 Main Street apartment or unit 1B. Well, unit 1B now has the FHA spot approval. Of course, the association itself has to be approved, right? Everything else that has to, have to match, or the T's have to be crossed, I's have to be dotted. But there are a couple of condo associations around here that are eligible for spot approval, and we have gotten spot approvals on. The reason why condos generally don't keep up with this, it's very costly for them to do, and it's a lot of time to kind of keep up with it. You got to renew every couple of years. So it's more of a pain for them to do. I don't imagine too many. I know there's a couple out there that are approved, but generally speaking, they don't keep up with their with the FHA approvals. It's a little bit more paperwork on the lender's part and a little bit extra time if there is a spot approval. You can probably allow an extra 2 to 3 weeks depending on how fast we can get everything done, because it has to be certified with the agency. But overall, they're not terrible if they're, you know, if you jump on them pretty quick. They're pretty painless. So some common questions, here we go. How long does it take to approve? Generally 2 to 3 weeks. Why would a condo not be FHA approved? Of course, the paperwork and money aspect of it. Does a condo have to be FHA approved? If you're going FHA, yes, it does have to be approved. And of course, you can go through the spot approval. And if you get the spot approval for that particular unit, then you're fine. Is it hard to get a condo approved? Yes and no. It really depends on if the condo association can stand on their own and get approval. Then we can go ahead and approve that particular unit. Okay, getting back to Christina, you had this question. The lookup for FHA condo. Here's the link right here. You just type this link in, and I can send this out, you know, to all participants as well. So you have this link. All you do is kind of plug and play in here. You pick Connecticut, the county, New Haven, Fairfield, whatever county you're in, the association name, and you hit it in, and it populates everything. If you want to see which condos are approved or when they have approved recently, you can also enter this in here. Leave out the condo name, just put the county, and then let's say, for example, you know, I primarily deal in New Haven County. You can get the whole list of everybody who was approved in New Haven. Okay, perfect. Rachel popped it into the chat bar. I'll get to the questions here in a second on there. So one thing I do like to go through and look at this, when I put what I'll type in, Westview Commons or whatever the condo association is. You can see, I think I might have a slide in here, but you can see, I don't, but you can see when they last applied for it, if they ever applied for it, and when it lapsed. If, let's say, for example, the condo association just lapsed a year or two ago, and we're looking to go FHA, I would, you know, say, hey, let's try it FHA and see if we can get this thing approved, because they just lapsed. You know, they just lapsed a year or so ago. Now, of course, you have to advise the client that this, of course, is a bit of a risk, because we're going forward with something that we just don't know if it's going to get approved or not. But they would be out at the bare minimum, just the condo documents. So that's for the FHA. Here's VA lookup. If you go here, my screen is blocking the site, but I'll get this out to everyone. You go to this screen here and go down the bottom to condo report. Let's move this out. Okay, can't hide it, but so that's for VA. Once a VA condo is approved, I've been told it is approved for forever. VA condos are almost like unicorns. They're a little bit tougher to find. But if you have a VA client looking for a condo specifically, this is one way you can narrow your search down to look up for VA. Just because a condo is not approved or not on either the FHA or VA condo list does not mean it's excluded. We can still go through and get a spot approval or take a look at it. You know, it's like anything, it's more of a government site. I put a little bit of faith into it, but not much, because somebody has to keep this thing updated, constantly. And I just don't trust that someone's always updating these lists. So that's why, I think it's incumbent on us as the real estate professionals to make sure that as we go through that we're looking for some red flags that could potentially kill the deal before it starts. Flood zone, if you go to this site down here in FEMA, you just type in the address right here, whatever the address is, 123 Main Street, hit search. That'll give you a map view of if you have a flood zone or not. And this could be for a condo, this could be for a multifamily, it could be for a single family home, just so you can, as a listing agent, you can say, hey, we're in a flood zone, or if you're looking at a particular property for your clients as a buy on the buy side, you could say, hey, we got to get flood insurance. And then, you know, if they want to move forward, they can kind of start shopping for flood insurance as well. But it's a pretty easy, takes maybe 30 seconds to look up. And that's what it looks like right in here. And again, we'll get the links out to you so you have them for your clients. So here's some common questions I normally get. Hey, why are the rates a little bit higher on a condo than versus, let's say, a single family home? Can everyone hear me good?
Yes, sorry about that.
That's okay. So why are the rates higher? Their default risk is a little bit higher than single family. You know, you have the association boards, which could, you have different players on there who obviously Mark was saying before could go rogue and start buying stuff or let things lapse, you know, let the roofs go for 20 years or, you know, differences. So the condo rates are a little higher. I would say, you know, today, the past year and a half, or let's say year or so, year and a half, we've had incredibly low rates on everything. Generally speaking, like most things with the rate, it comes down to credit and loan to value. But I'd say they're generally an eighth to a quarter higher than what's on the street. FHA barely probably see a difference in the rate between a single family and a condo, probably by an eighth. You know, I would say in today's market, FHA client, you're looking low threes, depending on credit, conventional low threes, mid threes, somewhere in there. Again, depending on credit, I'm still seeing some clients with rates, you know, high twos on their rates. And again, I think we covered that enough for the length of time to purchase, generally about 45 days. One question I didn't have on here, which I wanted to go over just because the market is a little bit odd right now. When we get the appraisals back in, we have to run it through an automatic system, much like AUS. When you get the AUS approval, just give you an approve eligible for the client. We have to do the same thing with the appraisals. When the appraisals come back, we have a score from 1 to 5. 5 being it's very risky, 1 being it's low risk. 4 and 5, we have to get another appraisal review. I don't know why. Most lenders are not going to tell you why you get a 4 or 5. It could be the appraisal missed something. Why didn't it use a certain comp? Maybe the house has sold 3 or 4 times in a relatively short amount of time. But it does happen in a market given like this when you have prices going up pretty fast or going down fast as well. If that happens, okay, let's say the appraisal comes back and you get a 4 or 5 and you have to do a field review, which means that another appraiser has to go out and do a desktop basically review. That could add about a week to 2 weeks to the transaction. This could be both on condos, it could be on single families, multifamilies, it doesn't matter. I just want everyone, since we have a pretty good audience here of professionals, to be aware of this because it's not a common thing that happens, but it does happen, you know, in a market like we're seeing now. I've never saw a field review go against what the other appraisal goes against. Kind of like, you know, they're, you know, band of brothers, if you will, you know, so, but it does happen. Just wanted to mention that. Any questions before we wrap things up here? Fantastic. I think we had a few in the chat bar. Let me just go here. Lisa asks, is there a way to vet the condo before the buyer's showing a condo? I would just ask, you know, whenever we're making an offer on a condo, I generally call a listing agent and ask, hey, you know, I ask them pretty much the questions we go over, or is there a way to find out before we make an offer? I don't want to, you know, I try not to waste anyone's time on any side of the transaction, whether it's, you know, list or buy side. So I try to ask the questions up front just to make sure that we're okay. I've also had, you know, clients are do some odd things too. I've also had clients just make offers on their own with their attorney. And I told them they're not going to qualify, but they get a contract and the deal goes up because there's just no way to get them approved. Okay, no, we just went over the FHA approval and then Rachel put it in there. So any last minute questions? Hey, fantastic. Well, I want to thank all of you for coming, taking the time out of your.
I got one more question, Matt.
Yeah,
regarding
go ahead,
to what Dottie was talking about earlier, when she's having a problem with an association where they were like having some nefarious things going on. Is there any way to research that elsewhere? I mean, is there any kind of any website or any agency that actually notifies people of problems with associations that are facing difficulties like this? Because I just heard actually from a contractor yesterday that he's doing a bunch of work on a complex in New Haven where they were pilfering money for years and they're in real trouble too. So
not that I've heard of. I'll ask around. That's a good point. But not that I've heard of. I'll pose that to the group. Anybody here have a backdoor way to kind of see if an association's up to par? I mean, I do know a couple of them that are out there. I'm sure just like everyone else, you hear things. So I try to stay away or at least share that information with people. Okay, Lisa put out ct.ju.gov if there's a lawsuit. Okay, thanks, Lisa. I appreciate that.
Yeah, that's true. Yeah.
Well, great. So again, my name's Matt Reith of Province Mortgage. Love to assist any of your clients looking for purchase condos or single families or any investments. I'm a former veteran, or I'm not a former, I'm a veteran myself. So any kind of local, I'll call them community heroes, police, fire, healthcare worker, teachers, military, veterans, I give a lender credit of $500 for. That's with any kind of purchase or refinance. So I, of course, want to be doing my job if asking for the business. If anyone love to help them out and give us a try. And with that, here's my contact information. If you could just feel free to reach out if you have questions. If even if you're involved, I'm not the lender, and you have a question, please feel free to reach out. Use me as a resource as you go along for any transaction you have. So hey, I've taken many calls. Hey, Matt, I got this deal. What do you think about it? So-and-so mortgage company, they're telling me this. No problem. Easy stuff to field.
Thank you so much.
Thank you.
Wonderful presentation, and thank you to the attendees for your questions and participation. We really enjoy having you today, and please stay tuned. We're going to be doing some in-person events at NHMR. We have a shredding event coming up, and we're also looking at planning our summer happy hour event for September and another shredding event in October, as well as the trade show. So thank you, and we'll see you soon.
Thanks, everyone.
Thank you.